All right, people. Oh, Lord. How's this? Well, thank you, dude. Thank you, guys. That's all that matters. I think what ended up happening was I was echoing, and so I muted myself, and I never I didn't unmute myself. So let me just go back and forth and say what I was going to say. Started off the year great. What I want to do, which I didn't do in 2021 very well, was I did not do very good about answering people's questions as much as I would like to have. And so 2022 will be about that. 2022 will be about answering people's questions, about doing better about that, and hopefully being able to, hopefully, yeah, okay, good. Can hear now, good. Hopefully just answering people's questions, whether it's about fidelity, whether it's about dividend investing, whether it's about a multitude of things. So appreciate that I screwed up, of course. 2022, we're kicking this off great. No audio to the stream initially. So literally just going to hang around for a little bit, answer any questions that you guys might have. You guys can join in. I posted the StreamYard link. So if anybody wants to join, feel free to do that. I want to do a little bit more ad hoc. I was really good about doing these in 2020. Did more scheduled in 2021. And the reason for that, if you guys don't remember, is every time I do a stream on the main channel here, I lose subscribers. Some people don't like the notifications, I guess. People don't like my face, probably both. But at the end of the day, for the people that do like it, I like to provide that avenue. And even that means losing some subscribers to keep some of the subscribers happy. That's perfectly fine with me. Losing one or two is not a problem. But yeah, I'm here to just literally answer questions. So Money Momentum, what's up? Thanks for being here from the beginning. Jay's Place, I see you. Frame of Mind, I see you as well. Thank you guys. You guys have been long, loyal subscribers to the channel. So much appreciated. I'm going to answer these questions and hopefully get a good queue up of these questions. Let's see if I can, this is the nice part about sharing. Hopefully I can share without sharing account members. So give me a minute while I try to access my TQQQ position, and that way you guys can see verbatim what I got. remember this device. Okay. Sorry, I got a new laptop, so hopefully it looks good. I think I'm on my phone now. Yes, hello. Okay. Wow, market did really well today. Okay. So let me see if I can get the TQQQ position up without the rest. Otherwise, maybe. Okay. Let me see. Where am I at? Oh, Lord. How do I switch tabs? Okay. How do I do this without sharing everything? Oh, we got Mr. Jay Holbert. What's going on? Let me just share this, Jay, and then hopefully, oh, I could move screens. That's perfect. Can I make this only? Let's go. Okay, cool. Now I got dual monitor action going. So perfect. So this is, you can see how much cash I'm hemorrhaging on all my TQQQ positions, but you guys can see I mostly write cash secured puts, or I guess naked puts. I don't really have cash because I'm broke, but I mostly write puts on TQQQ. I collect a little bit of money on here, but here's my TQQQ position. I got it to 100 shares. Cost base is 117 a share, and it's going to split here next week, maybe the week thereafter, and up about 45%. So I can't complain. I started accumulating shares. Oh, Jay left. Oh no. Jay left. I was just about to bring him on. And yeah, so that's pretty much it. Pavitra, what's going on, man? So yeah, that's it. So I'm up about $5,000. It's gonna split here. Continue to write puts on it, collect some money. So I'm up 50% on this one. I think about rolling some of them out all the time, but it is what it is. So I'm up $5,300 on it. Yes, you do see Houston. Houston's a good old time. So if you guys have any questions, I can bring up. Whoops, I can bring up some other stuff. If you guys have any questions, I'm good, man. So thanks for stopping by. Hopefully you have any questions. I'll hopefully be able to answer them as much as I can. What are my top dividend stocks 2022? Man, that's a good one. I would say they're not dividend stocks per se, rather than ETFs. I'm going, after learning a little bit about some of these income ETFs and where I'm at with my portfolio, I'm leaning more towards a little bit of growth and income as well, right? And so that's hard to do. And I know I'm going to underperform the market in terms of capital appreciation, but I still want that income, right? Like I'm still in that mindset where part of the portfolio, I want that good income. You know what I mean? So that leaves me with more of like a Devo approach, which has about 100 stocks. Maybe it's less than that. Maybe it's 50. Maybe it's Jeppy that has 100 stocks. And those are a little bit more aimed towards individual stock position holdings, writing covered calls on select positions, not all the positions. Whereas you have like a QYLD, XYLD, RYLD, while they're great for income, right? Income specifically and income only, you can't expect a lot of capital appreciation from those. And if you were to look at, let's just say, the last year's appreciation from those, that would be skewed, obviously, because in 2020 we had a large retracement and pullback, right? So Devo is up about 100% over the past 5 years. Jeppy, I think, is about the same. So if you are looking for a little bit of capital appreciation, those would be pretty good, as well as dividend growth. So I think I'm going to go that route. I don't think that they're as exposed to the downside as, say, XYLD, RYLD, QYLD. And I like the fact that not the whole position is written covered calls on, right? They're not writing covered call positions on every single one of them. So yeah. Am I in the right military? No, I'm in Midtown. I live in Midtown. Hey, man, yeah, you just got to experiment. Like, if you guys would like to join the experiment. You don't have to throw thousands of dollars. Just throw $170 or wait until the people keep coming in and out. I'm just confused. Like I saw somebody come in, I was going to bring him up, and then next thing you know, he leaves. I wanted to bring him up. Yeah, just do one or wait until next week, and then they will literally stop, not stop, split the stock, and you just have to buy what, like 80, $90 worth instead of $170 worth. So SCHD is good. I can't complain with SCHD. It's a little bit lower of an income than I would like, right? So if you're more okay with a 3.5%, so SCHD might be something as the portfolio matures a little bit more, and I can leave a little bit more dividends on the table. Like I've kind of come to the conclusion right now that $120,000 a year is really all I need in dividends. You know what I mean? Like if I had it my way, I would have probably like 120 grand a year in dividends. And a lot of the rest of it would be in growth. So if I have like, let's just say $5-10 million, I would aim a little bit less towards, say, the Devos of the world and Jeppies of the world. And I would aim a little bit more towards, say, like an SCHD or a VYM, just because I think that those would have a little bit more growth potential to them. And at the point where I had, let's just say, $10 million, I mean, I'd aim more towards like an S&P 500, just regular, because that would aim towards a 1.2, 1.6% dividend yield, depending on how up the market is. And boom, you get your 120 grand a year in dividend income. So it's about just understanding what the end goal is, right? Like, don't force a number just to force a number. Like, in my opinion, it's about understanding what you really need. Like, I don't really need more than $120,000 a year in dividend income. What I would rather have at that point is capital appreciation. And if capital appreciation happens, then it'd be more of a, let's just say, impact to my lifestyle than, say, the dividends that I would receive. So I think I've just matured a little bit more, realizing that it's not about just trying to get as much dividends out of the pipeline as you can. It's a little bit about stability. It's about managing your risk appropriately, volatility of the position, and a few other things. But let's bring on this Carter guy. He jumped in. Hopefully he's not some sort of scammer or something like that. Hopefully he'll share his camera as well. Carter, what's going on, my guy? All right. There you go. Heard it here first. So let's just see. Joey, what's going on, man? Much appreciated. Oh, hell yes. We got C North on here. Thanks for the clarification. Oh, so I didn't really give you all of them. So I guess Devo Jeppy as well. Another dividend stock will probably be XYLG, which I have a lot in the YouTube Moolah account. And then what else is there? I would say J&J's in there and Pepsi's in there. Although they're not my favorite stocks of all time, they're definitely solid, low volatility dividend plays. And I think that they're going to continue to do well. I am upset that I don't know what the hell is going to happen with J&J and their kind of spin-off, but hopefully it is what it is. Yeah, you can't talk right now. I hear you. No, you're good, man. Tell you a little bit about my backstory. So I don't really have much of a backstory. I'm a petroleum engineer by education, and I've been investing for about 8 years, since like 2012, 2013 timeframe. Started off doing relatively well, came out of college with a petroleum engineering degree, doing well in that respect, and just invested a crap ton, right? Like just invested as much as I could. It took me a couple years to get my footing. I'm just be blunt. And the impact of seeing a lot of my friends and coworkers get laid off in 2015, 2016, 2017 truly had an impact on my investing perspectives. So I was very heavily aimed towards dividend stocks and dividend stocks only for that reason. Now that I'm, fortunate to have a decent amount of dividends kind of coming in, I think it was like 8,000 in 2019, 2020, it was 14. And then this year closed at like closer to 21 ish thousand. I have to do the final numbers here still. But, now that the dividends are kind of rolling in, it doesn't necessarily make sense for me to only focus on dividends. And I think I'm limiting my true potential just focusing only on dividends and trying to get like dividend income growth up. Not dividend income growth, dividend income up in general. I could easily get $50,000-$60,000 a year in dividend income if I wanted by investing in stuff like QLD, RYLD, but that's not the goal. I mean, the goal for me is long stability, sort of growth generating dividend plays where I can, play the real game, which is like, I don't know, maybe a little bit of Monopoly, you know what I mean? Or just testing out different things, going into business for myself. And I feel like doing only dividend investing won't get me the sort of capital appreciation that I so want in order to do something like that. So that's a little bit about my backstory. Still work 9 to 5, have a side business doing stuff on YouTube, sponsorships, trying to grow the Twitter as well. So if you guys could do me a favor, follow me on the Twitter. For those of you guys that don't follow me at all on Twitter, much appreciated. I'm really trying to just blow that up as big as I can. Get another stream of, let's say, not another stream, just another avenue where I can talk to people. Yeah, you like the main dude? I need a haircut for sure. Have I ever thought about own paid for real estate, meaning I guess rentals or something of the like? Yeah, I think it quite often. I do think about it quite often. I've actually thought about recently getting into land development, housing developments, and building my own duplexes, which would actually end up being a lot cheaper to be able to do. And maybe selling one of them to kind of get the other one at cost, and then renting the other, and then continuing kind of the process until I get a portfolio of some, 1 or 2 a year is kind of the hope. And yeah, that's kind of the goal, is to get a little bit of that. And then hopefully with time, get a portfolio of duplexes or triplexes that I could then sell and then maybe step up, right? Instead of doing duplexes, triplexes, maybe do something more along the lines of 40, 50 units and doing that as well. So yeah, that's kind of the thought process for me. It's another avenue. I kind of think about my strategy in a multitude of different ways, like have my stock portfolio. I want to have my own separate business, which I kind of have one at the moment, but I want to do more with it. I want a cash pile, and then I kind of want a real estate pile as well. And the real estate pile, the only thing I have really real estate related is real estate investment trusts, which I was either going to make another video about that or do this live stream and hopefully answer your guys' questions. So I thought this would be better to do. Tesla breaking all-time highs tomorrow. Maybe, man. I don't know. I'm broke. I don't have Tesla. Much love for the folks that do, and hopefully you guys continue to do well with that over time. I can't see myself investing in something like a Tesla. I don't have the stomach for it, and it doesn't make sense to me. Toyota is the second next biggest car company. It's $250 billion. It produces way more cars than Tesla does. Okay, so let's take $250 billion, and then you have some of the biggest energy companies in the world. Let's exclude Saudi Aramco. Let's include something like a Shell or an Exxon. Those are worth about $200 billion, more like 150 at current prices, but let's just say give it $200 billion. So let's just say Tesla is the biggest energy company in the world and also the biggest car company in the world. That leaves it with a valuation around $450 billion. And at the moment, it's about a $1.2 trillion market capitalization. Doesn't make sense to me. But hey, I've lost, I'm not trying to, it's a great company, right? I just don't think that the stock is appropriately valued. I think it's a little bit overvalued. So yeah, hopefully that helps with that. With respect to that, I think it's a great company, so I'm not doubting the company at all. I can't touch the stock. It's just not for me. Am I 29 or 30? I'm actually 30. I guess going on 31 here in a couple of months. So May-ish time frame. So that's where I'm at with that. yeah. But yeah, glad that we got 25 people in here for like a random stream, like 11 p.m. on the East Coast, so it's like 10 p.m. here, out of nowhere. So hopefully we'll be able to get some good questions going. Maybe we'll be able to get some people joining. Hopefully some randoms they're going to show inappropriate pictures like the guy we just had. But yeah, more than happy to answer any questions. For me, it's more about what do we think about upcoming positions for 2022. I'm long semiconductors. I think SOXL is one that I've kind of started to invest in as well. My traditional IRA. I'm trying to get that up to 100 shares and hopefully be able to ride that out because I think semiconductors are going to come back with a vengeance later half of the year. And but anyway, hey Chase, what's going on, my guy? What do I think about Intel? I think Intel's a great company, man, but I just don't think Intel is innovating like NVIDIA is. And I think right now people are rewarding innovation and movement into that space of, let's just say, the next generation of chips and semiconductors and all that crap. So I think Intel's really good at making CPUs, and I think that's kind of their bread and butter, and they don't really want to step into sort of the next realm of what might drive computers forward. And I think with that, they might be getting left behind a little bit. Now, that's just my rudimentary knowledge in the industry, but Intel still makes a lot of great products, right? They still have a huge market share of the entirety of everything that's going on. So it doesn't make sense to me why, to be very blunt, like I am bullish on NVIDIA as a company and what they're doing, but it doesn't make sense to me why they're rated at a 99 times price to earnings, while Intel is rated at a 9.9, right? So if you were to say dollar for dollar, Intel is technically 10 times cheaper than NVIDIA for the same dollar of earnings. Now that's pretty impressive, right? I mean, we can get into it just quickly. Actually, I should probably just bring it up over here now that I have this bad boy over here. So let me get Robin Hood, our hood, your hood, my hood, all the hood. All right, let's check out INTC. Share this bad boy. You never done this before. I can't be your first time. Okay. So yeah, 53 bones. I think it's a good price here, but you can see the price to earnings of this bad boy is 10. So $216 billion company, meaning that they're making about $22 billion a year in income coming from Intel here. Whereas if you're looking at NVIDIA, while I'm bullish on the whole sector, which is why I'm investing in XOL. I mean, look at that growth, 5-year growth. You would have 10x your money. Phenomenal, right? It's trading at a 90 times. Okay, so it's come down a little bit in terms of price since I looked at it last, but you're looking at 90 times earnings. So they're lucky if they're going to make $7 billion, and they're valued way much more. So wait, let's get this guy on here, man. What's going on, brother? What's going on?
What's happening, man?
Dude, congrats. Well, what's going on? Glad to finally get you on the stream, man.
Yeah. I'm at work tonight. Just had a few minutes to step away, but yeah, I'm Joe, by the way.
What's going on, man? Yeah, I know I've been conversing with you every once in a while in the comment section and stuff like that. So good to finally meet you face to face.
Yeah, definitely. Same here, man. Yeah.
What are you working on for 2022? Anything crazy or?
I just refinanced my house, so I'm gonna have that bad boy paid off in say about 10 years or so. Trying to max out. I spoke to you a little bit earlier about my Roth conversions, so be doing that. I do a whole lot of boring index funds.
There's nothing wrong with that, man.
A lot of VTI. I do some VYM stuff like that. Watched Kyle a little bit. He's kind of got me a little bit into Facebook now, so yeah. I'm looking into that a little bit too. And then I just started that small one share position in TQQQ.
Hell yeah,
And
man. It's going to the
see,
moon.
we'll see how it goes. Yeah,
We're going to Pluto, man. We're not stopping at the moon. We'll take a pit stop on the moon to take a photo, but we're going to
yeah.
Pluto.
Then on to Mars. Yeah.
Then on to Mars, and we'll beat Elon past there. But yeah, I'm excited, man. I honestly think it's a good one. But hey, there's nothing wrong. I mean, I wrote a tweet the other day talking about how 10% of traders are profitable, right? And a lot of times you see these people every day, just like, and maybe they're smarter than I am. I'll give it to them. You know what I mean? But I just honestly think they're churning too much, and they don't know what they don't know. And I think that some of them are really intelligent, and I give them the credit where it's due. But I think a lot of them are just fumbling their money too much, and they'd best be better, most of them, putting it into a VTI or a VOO. And I think those people that have the discipline should just say, hey, I'm focusing on other things, or they have the discipline to say, I don't know a damn thing. I'm just going to put in a VO. Not to say that that's you, but just let the market handle it. I'm going to match the market returns. I think that's very mature for a lot of people to admit and actually do. But anyway,
two big things for me is I don't really have the time. I've got a 9-year-old kid, and I prefer spending time, a lot with him and my wife, and I don't really have the discipline to sit down and to put the due diligence in on a lot of different companies. So I just figure, if the market's giving that much of a return at this time, then it's the best place to put your money. So
I'd hate to say that it's taken me a lot longer to realize that, and I think I've mentioned it a couple streams or a couple videos as well. But I probably lost out on several $100,000 by not investing in index funds and trying to mess around with oil in down years. And then, of course, I've had a resurgence. But, I could sell, let's just say, Exxon for, say, 50, 60% up. But how long have I been holding Exxon? And same thing with Wells Fargo, right? I was holding Wells Fargo since 2014 timeframe, and I just sold it for a 50, 60% gain. So some of those, were 100% gains, because I did grow the position over time. It's not like I've had 1,000 shares of Wells Fargo, but I've just started to realize it's like there's a lot of innovation going on, a lot of really smart people going on, a lot of capital going into the markets that I have no idea anything about. And I don't know anything about, for a while, I didn't know anything about social media marketing and stuff like that. Now I'm a little bit more in tune with what the hell's going on with that. But now everything's kind of moving on to the metaverse. It's like, well, I don't know the damn first thing about metaverse or cryptocurrencies and all that. So it's just like, I'd rather just invest in, the Jeff Bezos of the world, the Elons of the world, and focus on where I do see a good value. Caterpillar in, what was that, late 2019, when I saw that hit below like $130 a share, I said, that's a good value. Let me put money in, right? Like I can see something like that. But I feel like when you are trying to individually stock pick all the time, you lose the forest through the trees a bit, and sometimes you force things. Whereas if you're an index investor and you see something like a Caterpillar going down super cheap, or an Alibaba right now at $110, $120 a share, it gives you the opportunity to be like, okay, let me sell a little bit of my SPY or a little bit of my VTI and put it into that, rather than always trying to find the next biggest thing where you're trying to force things to work and spreading yourself too thin and trying to be like a squirrel and capturing all these nuts for the winter. And yeah, I don't know. I wish I followed more of your discipline over the past 8 years. I think it would have done a lot better for me.
Yeah, I'm getting near that 40 mark, so I don't have as much time, especially if I want to retire a little sooner. So it's more prudent for me to not lose any money either. So
40's
I
young,
figured,
man.
yeah.
40's young. Don't sell yourself
It is.
short.
Yeah, it is. Yeah.
Yeah. Cool.
All right, man. Well, I'm gonna jump off here.
Well, it's great to finally meet you, man. I'm really appreciating it.
Same here.
Hopefully I'll be able to have you on at a later date.
Yeah, definitely.
Either on my channel or on Friday nights or Saturdays if Kyle and I are available. More than happy to have you on. So
definitely. I appreciate everything you do for this community, man. You're really cool dude. Appreciate it.
Much
Yeah.
appreciated. That's why I do it,
Yeah.
man. I do it for the folks like yourself that get any sort of benefit from it. So much appreciated.
Yeah. Have a good one, bro.
You too, man. Have a great
All right.
2022.
Yeah. Same here. Bye bye.
Cool, man. Yeah, that's why I do it, man. I do it for people like Uncle Joe. Any advice? Okay. That was really cool. I love talking to people like that. I don't know anything about GNPX, so I'm gonna skip that one. Apologies there. Let's just see. XOSL Premium is juicy. He's thinking about put selling the other day. It's it printed today. I am shrinking the portfolio to only SOXL and TQQQ puts for my options trading. I'm doing less contracts, more at the money. My thought process is if I get assigned, I get assigned. But in the meantime, I'm thinking the majority of the time, SOXL, TQQQ are going to go up and to the right. We'll have a year or two where they pull back, and I might be stuck with them or have to roll or what have you. But the times that I did have to roll in December, I went from like a 172 to a 165, and I was able to capture like another $500 or something. So I was able to roll it a couple strikes down, still at the money. I was in the money on my one that I had to roll, two at the money, able to roll it out another 2-3 weeks and be able to capture another $500. So the premium on those things is so high. So it's really about contract management, risk management, making sure you're not spreading yourself too thin. I mean, you don't want to do and load up all your margin at the money, because obviously if we have a 10% correction, you're going to get wiped. But if you're prudent about it and you're keeping the contract size low and you're using very little amount, Dave's even starting to utilize it. Dave's not getting as aggressive at the money as I am, but Dave's just like, it doesn't make sense. And I told him this. I told him, he was just like, I might have to do, I forget what it was. He was like fooling around. He's like, I might have to do like 30 contracts of Qs at a 10 delta or something stupid. And I was like, Dave, I was just like, the capital exposure is way less on TQQQ, and you'd be able to make just as much money. And I think he's finally starting to see that. Now, he's still staying a little bit more conservative. But I like SOXL, man. Like, I'm long semiconductors. I think it could be a great space. I don't think semiconductors are going away anywhere. Just imagine what kind of profits will happen when, some of the shortages, change in 2022, late 2022, early 2023. I think it's very bullish for the sector. Maybe I'm wrong on that. But at the end of the day, worst case scenario, I got 3 contracts that I'm running on SOXL and 5 contracts on TQQQ. So at the end of the day, that's like $100,000 worth of premium that I'm on the hook for if everything goes to crap. So any advice someone who just started self-directing their 401k, started building your positions in QQQM, SPLG, and Meta? What's SPLG? Why do I feel like I know that? Is that a growth side? Oh, it's a market cap weighted. I'd wonder why you do SPLG versus, let's just say, like an SPY or something like that. Like, that's interesting. You get about the same return. I bet with SPLG you get a slightly better yield, though. Let me just double check. Where's the yield on this bad boy? Nah, it's about the same yield. Okay. I wouldn't complicate it. I'm curious what SPLG options look like. For me, I would just go with something simple like SPY personally. I like QQQM. There's nothing wrong with QQQM, especially if you're not going to write options. Meta ETF, I don't know how much allocation you'd be putting to that, but I like it, man. Especially if you're just trying to go for growth. I don't mind it. It's very SPY-ish intensive, which I think a lot of people, you'll be matching the market, so there's nothing wrong with that. So if you got 20 years to go, I don't see anything wrong with it. And depending on what your kind of active time in investing will be, then it might be the best thing for you. If you don't really like to look at different stocks and you'd rather just like not do any research and just invest in something, SPY or SPLG in that respect is probably the best. Meta ETFs, I don't know what the hell's going on with that. It's interesting. It's like, do you invest in the whole ETF, or do you try to find the ones that are the best? Or do you just invest in the S&P 500, knowing that in the S&P 500 you'll have companies that are going to be doing the metaverse anyway? I don't know. So anyway, hope that helps. Sounds like you're off to a good start. I just like the self-directed part and the fact that you're not trying to do like a target date fund. I think the fees on those are too high. I wish investing YouTubers talk more about investing from state to state. They'll be like $100K for this house in North Carolina. Like, dude, I live in a city where $100K doesn't buy you a closet. Oh man, yeah, I saw your tweets earlier about that. I thought it was pretty funny. Yeah, California, you can't buy a closet for like $100K. I hear you, man. I mean, I understand that. But to me, I feel like that's the reason why a lot of people are leaving California and moving to Texas and moving to Las Vegas and stuff of the like. So yeah, I don't know. I think it's, depending on what your goals are, if your goals are, to live in California, and, that's something you're going to have to live with, you know what I mean? But if your goal is to try to like create value, like that's the thing, is like, I don't think you could do a lot of flexibility in, say, real estate development in states like rural states, right? I feel like in cities that are growing, you can do you can find a lot of wedges where you could do real estate development and make money that way. But you can make a lot of cash flow in those rural countries where you're able to get 1% return a month in terms of like rental, revenues. Right now, of course, you're not taking home all that 100% of that 1%, because you obviously have mortgages, expenses, and stuff like. But that's the 1% rule, right? Like if you're able to get, you say, buy $100,000 house, rent it for $1,000 a month, you're going to make money. Just kind of quick math. So yeah, I mean, it's very dependent, right? Cap rates in rural cities is going to be much higher than in, say, like big multifamily properties like I live in, right? Like I live in a mid, I don't know if it's a high, it's probably more like a high rise. I live in a 27-floor building. You'd be lucky to sell this to an insurance company for 4% cap rate. So whereas, you'd get double that, if not 10%, if you lived out in the country. So no stock YouTuber tells you the average of a millionaire stock percentage of a millionaire portfolio is about 10% on average, because you get about 8 to 10%. What? I'm confused. Oh, you mean like they're trying to tell you that it's like $1 billion a year and you're going to make 30%? I know a lot of people that try to say 30%. And the good years, man, you're going to make 10 to 15%. Like, I'm just going to be blunt. Like, you're going to make 10 to 15% in those good years. 10 to 15%. But you're going to have those years where there's retracements, like 2015, where it's either flat or slightly down. And those years are going to be tough. And so you're going to have great bullish years where you're going to have 10 to 15%, or years like you had last year where you're up 20-something, 27, 28%. And you're going to have years where you're flat. You know what I mean? And that averages out. Like, let's just say we're flat this year and we're up 27% last year. That brings the average down to 13%. Now, let's just say 2023, we're slightly down. That brings it down to, 8%. You know what I mean? So it can happen pretty quick. You can just have a couple down years or flat years, and it really brings down the average overall. Davey, Facebook for the win. I agree. Are you still allocating 50, 40, 10 in your passive income portfolio? For Tom, great question. For my YouTube Moolah portfolio, I am doing XYLG, which takes care of a lot of that. It's like 50-50. It's 50-50, basically VOO and XYLD. And that did really well this past year. Let me just show you guys. That did pretty well this past year in terms of returns. Now, granted, the whole market returned about 27% for the past year. This returned about 16.5%. So pretty good comparatively. And then it yielded about a 4.5 to 5% yield for the year. And I know it's going to be a little bit bigger. They're doing a pretty good capital gain fund or push here at the beginning of the year, which I think you'll get on the 7th. I think it's Friday. So I'm excited for that. That's XYLD, RYLD, QYLD, as well as XYLG. So that's pretty good. I'm excited about that. So I like this. If it's a little bit something that's a little bit more simple. Dave doesn't like it because the expense ratio is high. I agree with him. Or you can just buy SPY. Let's just say I have 100 shares of SPY. Let's just say I have 200 shares of SPY to make it easy. I'm only doing covered calls on, let's just say, 100 shares of it versus, say, both 200, two contracts or 200 shares. And it'd be the equivalent, right? So for me, I'm just trying to get the SPY up. I'm just trying to get like my total, match the market sort of up. I still have a crap ton of XYLD, crap ton of RYLD. I anticipate that if I were to liquidate, what are really the only big individual stock positions I might liquidate is Caterpillar. I go back and forth between Realty Income and Stag. Stag, I think, is a little bit overvalued here, but I like Stag for the long term. But part of me is just like, you know what? Overall, it's probably better if I just put it in SPY and do the 50-50 split, XYLD SPY. But who knows, man? I think it's still a great opportunity, but you have to think once again what you're doing it for. Like if you're doing it for a 4% yield, being able to continuously grow the portfolio, right? But if you need a 2% yield, it's a stupid allocation, right? Like the allocation was meant for being able to get a 4%, 4.5% dividend yield, maybe closer to 5% if I'm lucky, if RLD wants to cooperate. And that's while I'm still kind of accumulating capital in the portfolio. If you had, let's say, $2 million and all you need is 2%, you need 40 grand to live off of, then you could do something more like 80-10-10 and probably get the same sort of factor, right? So just because I'm doing something doesn't necessarily mean you need to, right? It's about, listen to the video. I think I'm saying I want to target a 4 to 5% yield, and that's why I did the 50-50. Now, if I only needed, let's just say, a 2% yield, then I'd probably get closer to, and that's why I made that spreadsheet, if you guys remember, that kind of allocation spreadsheet, which I think is available on that video. I think, let me just see if I can bring it up really quick, where you can kind of put in briefly the different ETFs that you want. That's my wallet, so I don't want to share that with you guys. Spreadsheets, Patreon, no. I don't have a Patreon, by the way. I should, but let's see. Where's this bad boy at? 50-40-10 approach. There we go. Let me zoom in. Oh no, the yield's not working. I'll have to check what's going on with the yield in the portfolio. But basically, it was just like, well, how much capital do you have versus how much yield, right? And you can kind of like back into what answer you want. And like, for example, I think one of the things I was looking at was like a 75% SPY, 20% XYLD, and a 5% RYLD because I only wanted like a 3% return. It's very much dependent upon, what you're kind of looking for. Like if you need a 10% return and you're like, I can't work anymore, I'm done, I can't, then you're going to be 100% QYLD or 100% RYLD. You know what I mean? Like it's not a one size fits all, right? So I try to match that sort of approach, but once again, I'm trying to teach you guys how to fish, which a lot of people get pissed off because any smart YouTuber that's only strictly in it for views and trying to get money would just be like, oh yeah, that's the best approach of all time. Do it, just do it, right? Snake oil salesman, yeah. But I'm trying to help you out. I'm trying to give you a little bit of some context as to why. I need to fix the spreadsheet because apparently it's not reading the yield appropriately. Everybody looks for the stock guru that's going to tell them you don't have to do any work, do this full time, be a millionaire. Like, no, dude, become a millionaire first and stop being lazy. I mean, I'm with you, man. That's why people follow people on YouTube. They get shilled into thinking that this stock will make them a trillionaire. You don't have to do any work. People don't want to do any work. People don't want to put in any research. But the truth is, it takes time, consistency, and good capital contributions. There'll be some lucky ones for sure. But it is what it is. I bet my life Matt has a few million in assets, so when you play the stock game with 100K, you better be prepared to lose a ballsy investor. When it hits, great. When it doesn't, no big deal. I don't have a few million in assets, but hopefully I'll get there soon enough. Just under $1 million right now. Davey's going to get aggressive. Get aggressive with me, Davey. $300 by weekly allocation. That's pretty good. How's my mining laptop doing? Let me show you guys. It's pretty cool. Mining away, man. Doing a live stream and mining away. Making a couple bucks a day. I mean, I'm doing it for a hobby, right? Like, I'm not doing it to print money, right? And this is a new laptop. My buddy convinced me. He's like, dude, you need to, well, there's a whole backstory. I don't want to lose you guys, but pretty sure the house cleaner dropped my old laptop. It's 11 years old at this point. The screen is half working. It was hard to start editing videos. I can, I have a YouTube business. I can write this off. I can mine with it. I haven't bought a laptop in 10 years, right? So no matter which way I looked at it, I couldn't do my normal YouTube job. I have a side business that's doing it. So I'm just like, you know what? Part of me was just like, do I need a $2,000 laptop? No, but it's badass, right? Like, it's not a Mac. I can't afford that, but I'm making $2 to $3 a day off of this. It rendered video. I just made a video earlier. The video it rendered was lightning fast comparatively to my old laptop. So that'd be nice. It runs faster, starts up faster, doesn't have as many problems. So the speakers on the old laptop didn't work. So unless I was wearing headphones, I couldn't hear shit. So it overall was just a good purchase. So pretty cool to see. And I could run the CPU. I have a Intel Core i9 in here and make a little bit of money with Monero on that, which this is mining Ethereum. And then I'm doing it through NiceHash. So it ends up mining Ethereum, sending it to them, and they pay me in Bitcoin instead. So which is fine because a lot of the stuff that this is just easier. Like I said, I've had mining computers in the past. 2017, 2018, I had 3 mining computers going at once. Doing some pretty good mega hashes. They were AMDs. They weren't NVIDIAs. This is a one NVIDIA. But anyway, different story for a different day. I don't want to go down that path. You guys aren't here for that. But if I was doing like a legit mining operation, I wouldn't be doing NiceHash. I'd be doing like legit stuff. But it's cool. Little hobby going on. Move to a cheaper state. Yeah, I mean, that's kind of what I'm thinking, man. Like, if you're complaining about your housing prices, you want a house, you want to get involved in real estate, it's like, move to a cheaper state. You know what I mean? Like, anyway, I hate to be like the bearer of bad news, but I feel like that's a lot of people are leaving California. Great living in Manhattan. Talk about general pop that wants to grow. They're over will be misguided. I agree, man. Like, a lot of people are just like, oh, it's New York. It's New York. It's like, well, do you have the opportunities to do as well? Anyway. 50% SCHD and 50% ROD retire and need to build as much yield as much as price growth. I mean, SCHD is pretty good. I can't complain with that. But I mean, if you really want to do better in 10 years time, wouldn't it be better more so to invest in, like, let's take, for example, you invest in SCHD, or sorry, RYLD, and it kind of stays flat, right? Maybe you get 5% a year overall, inclusive of the dividend, right? Because I guarantee it'll underperform the market. Whereas SCHD, it's going to grow at 8 to 10% a year. Well, in 10 years' time, 8 to 10% a year, you're going to get 125% return. RYLD, be lucky with dividends included to get maybe a 40% return. So technically, you'd have 50%. I don't know about 50% more money, but you'd have more money if you just invested in an SCHD or an SPY. So yeah, Dave. Yeah, I just talked about this. I told him a little bit about why I'm moving a little bit more towards from a NUSI to like a Devo and a JEPI, because I don't necessarily need to be all income. I'd rather take like a 4 to 5% yield, and something that's grown, 100% over the past 5 years. Let me just pull it up. Then let's say an XYLD, which is probably going to remain flat in terms of overall. Like, when the thing that I like about Devo and JEPI is they don't fully write covered calls on everything, so it's not fully capped. Whereas like an XYLD, RYLD, all those bad boys, those are fully capped. Like, those are 100% written, and so yeah, like, I think that you have the opportunity. Maybe I misspoke here, but Devo was a 52% return over the past 5 years in terms of capital appreciation. I'm sure the dividend was really good. And JEPI's rather new, but returned pretty good over the course of time. You look at QYLD, and you think about it, the NASDAQ returned about 21% last year. This thing was down 2%. Yeah, you got a good yield, but like, what? And then you look at the 5-year view, and this is in a bull market. So you better hope, that you're getting your income from it. I would expect that it stays flat over time in terms of capital appreciation. And you're going to take a big pay cut during these years where there's, say, corrections or 10 to 15% pullbacks, and it's going to take some time to get back because they're writing covered calls on 100% of the portfolio. And that's part of the reason why I like XYLG. That's only 50% of the portfolio, but as David mentioned in the comments here, you just do 50-50 SPY and write 50% on half your SPY contracts, and then you don't have to pay the 0.6% a year. But if you look at, say, XYLG, past 1 year returned like 16.5% versus, say, XYLD, which returned about 9%. So returned a little bit better compared to SPY over the past, over the past 12 months. SPY probably at this point turned 27%. So it was halfway between XYLD and SPY. So gives you a little 50-50 there, which I like. JEPI did rather well with it as well. Oh, Lord. What's going on? Anyway. I'm trying to trifecta you, Dave. 3 million and a couple of Airbnb rentals, it could happen. You mean me or you? $3 a day. How much electricity to make $3 a day? I don't know. I'm broke. Let's see here. Why does it keep cutting in and out like that? Sorry. Place your vacation fund in NUSI and it's down. Probably should have looked into something different. NUSI's not bad. I mean, NUSI's not bad. I just think, holy crap. Let me pause this bad boy. NUSI's not bad. I just think, it might be trying to do too much. I don't know. Yeah, it might be trying to do too much. I had better hopes for Nusi, and it didn't perform as well as I anticipated this year. Which is kind of why I moved a little bit more into Devo and Jeppy. One, because I want to be more like Dave. Two, I honestly just think they're going to perform better over time. I thought Nusi would perform a little bit better than it did. And it really let me down. And in the first half of 2021, it actually did perform pretty well. And then it really did not perform very well in the second half of 2021, which kind of bothered me a good bit. So yeah. Dave, are we getting you on here or what? I missed the second half of your stream last night because I was on the plane and taking off. So apologies, my friend. But almost an hour. Let me know anything in the comment section. Hit me up on Twitter. Would love for you guys to follow me. If you haven't already, please go and do that. It means a lot. I'm trying to grow the Twitter following. Yeah, Dave's doing it for Black Swan events. And I'm over Black Swan events at this point. So, but hopefully you guys learned something today. Hopefully I helped you out as always. That's why I'm here. Really good to hear from Joe. I'm so happy that he was able to stop by, and nice to finally meet him face to face. I've talked with him on and off. Comment section on Twitter, comment section on YouTube. So cool to be able to actually meet him in person. Hopefully get him on one of the streams here one of these days. But yeah, if you guys don't have any other questions, man, love you all. Much appreciated. Excited for 2022. Long SOXL, long TQQQ. If you guys have any questions, let me know on Twitter, Facebook, Instagram. You know, it's about the same thing. Matt Money. Just look me up. Hopefully it has my weird looking face smiling and you can message me in any way. Other than that, I might cut it off. If you guys have any questions about, you know, dividend stocks or anything like that, or any of the positions, let me know. I'll be more than happy to make a video about it or just send you a quick screenshot. But yeah, I'm probably watch like an episode or something of TV, head to bed, and I got a long day tomorrow. So much appreciated as always. Love you all so much. Thank you for stopping by, and I'll catch you guys on the next one.